Good evening, everyone. Welcome to 20 MTV Live Trading. My name is Gino, and I am a student with 20 Minute Trader. Excited to be back here tonight. Those of you that were with me last night had a pretty good night. Hit 2 trades last night, one for 100 each. So pretty fun. And while we're waiting for others to join, if you could type into the comment section where you are watching from. I am currently trading from Ohio, and weather's still not good, just as yesterday. So hopefully, as we get farther into May, the weather will be a lot better and there'll be a little bit more sun. If you put in the comment section where you're watching from, we will get started as soon as more people join. Thank you for being here. Those of you that are here already. GA, India. Look, somebody's already typing learn again. Ireland, Dayton, Ohio. Nice. Ohio, nice. Sacramento, Sri Lanka, welcome. Idaho, Richard, welcome. And why? Let's see, there's already what? I see one person has already typed learn in the comment section. And why I highlighted that is because if you get going, if you click the link in the description on YouTube or type learn in the comment section, Facebook, Instagram, we'll send you a free ticket to the web class where you can register and get all your questions answered live regarding what you're about to see. Thailand, welcome. Texas, Canada, Georgia, again, Malaysia, welcome. Thank you for being here. Super grateful and excited as always to come out here and trade in front of you. But real quick, this is for informational, educational purposes only. This is not financial advice. Trading is risky, and I am trading at my own risk. Welcome, everyone. So we'll do my best, as always, every night to keep it as high level as possible. What you're seeing right here is a chart. This is a 1-second chart. All right. In 20 Minute Trader, and as a student with 20 Minute Trader, this is why I'm out here to kind of go over this and talk about this. But a 1-second chart, the reason why we use a 1-second chart is because we need this chart to update every second as quickly as possible rather than every 5 seconds or every minute like some other traders use. All right, so we use a 1-second chart. The reason why is we need it to update is because we see a trade to enter. We have about 1 to 3 seconds to enter, and sometimes maybe a little bit longer, but rarely. And it's usually pretty fast. The trade happens pretty fast. So we need the chart to be updating as fast as possible, as constantly as much as it can. And so that's why we use this. So last night, some of you kind of saw that there was at the end of the night, if you were with me last night, there was a good setup, which I'll get into in a second, but I missed my entry just because I was talking at the time about something and I missed my entry. So I didn't enter the trade. And that just kind of goes to show you how quick we have for us to enter a trade. And so what you're also seeing on here, our line chart, this is a line chart as opposed to candles because the pattern we're trading, the gold pattern we're trading is shape based. Now, you don't have to understand what line charts are. The candle charts are basically the little boxes with strings hanging out, sticking out on each side. And so we use the line charts because it's easier to see the pattern because the simplified version that I'm trading and all gold patterns the gold pattern is shape based. So the gold pattern, it is a proprietary pattern discovered by Jeremy Russell in 2021. It's undergone millions of tests and been subjected to thousands of trader research and development clinical trials. It is thought to be the highest probability way of fast trading that exists by the founders and users of the 20 Minute Trader system. It's exclusive to 20 Minute Trader students and those involved with 20 Minute Trader. It's about a 5-hour video course with detailed visuals, drills, and other things to help you as a trader learn how to set up and understand the charts, such as what we're looking at, and other trading platforms, and how to strengthen the probability of a solid, successful trade. So again, if you're new to this and you haven't traded before, this here chart, I know it can be overwhelming. It definitely was overwhelming for me when I first started trading. But the cool thing, if you're a student with 20 Minute Trader, 8 to 9 hours a day, they have what are called chart sessions where any student can join and get with a mentor and get help fixing their chart, setting up their chart, and learning it more and getting comfortable with their chart. So you see 3 lines here. You see an orange line, a blue line, and a white line. The blue line is the value of gold. That is the instrument we are trading. The orange line is the Dow Jones. It is the value of the average stock price of the 30 largest companies by industry in the United States, such as Home Depot, Nike. That orange line is a comparison index. It's helping us predict which way that blue line is going to go. So because the blue line is the instrument that we are trading, whichever direction that blue line is facing, that's the direction that we are going to trade. So right now, what we're going to look for, we don't do anything until we have a divergence, which is a fancy way of separation between both lines going in the opposite direction. So we have a little bit of a divergence now. We have the blue line pointing up, and we have the orange line kind of flat pointing down. And what you'll notice here, additionally, these widgets, these trend widgets, these are proprietary widgets that are available to students at 20-minute traders, specifically those that trade the gold pattern. So we have a separation of both lines here. And if we look for a meaningful drop down, I am actually going to enter a trade, and I'll get back to what I was talking about in a second. So I just entered a trade. I saw what I liked here. I saw a divergence. I saw a separation. We'll see what happens here. So what you'll notice here is this is where I currently am profit-wise. Up here, this is a take profit order. This is a stop loss order. They're basically predefined limits that if that blue line were to hit that, we would exit the trade with that amount, win or lose. Up here would be profit. Down here would be a loss because I bought. This is my stop loss. I can move this around and I can move it up. I can also move that one down. I did enter the trade there. I will move up here to a little bit just to protect. And this is called a trailing stop loss. So what that means is right now I'm in a risk-free trade. If this blue line comes down and hits my stop loss right here, that means that I'll finish with some profit. I won't lose. I won't be in the red. Right now I'm in the green. You can see that here. You can also see that down here. We just need this line to keep going up and hit that take profit right there. That's what we're waiting for. But we are protected. We're in a risk-free trade. There's a little bit of a trailing stop loss. So I'm actually going to hold that there and see if it goes up and hits our take profit. 35, 15, it's coming down. It may hit that stop loss. We'll see. Yep, I think it did. A little bit of a delay there. Maybe. Yep. So it came down and it hit my stop loss. That's okay. The reason why I entered that trade is because of what I saw. I did protect it though, and I decided to do that just based on it was my first trade of the day. So let me kind of go back, right? I entered that because I liked what I saw. I liked the divergence. I liked the separation, and I like the meaningful movement, the meaningful drop down here on the RSI. So let me start over. So we're looking for a divergence, right? We're looking for one line going one way and another line going the other way. Whichever way that blue line is facing, which is the value of gold, that is the way that we are trading. So that's the direction, right? Once we have that divergence. Now, if that blue line is pointing down, it would be a sell. That blue line is pointing up, which it was earlier, it would be a buy. You can see this blue line here is my entry, and this is where I move my stop loss to protect it. And I thought it was going to run up there, and that's okay. I could have exited with some profit. I didn't. It was my first trade of the day. I am trading a funded account, a real account. So this is our where. This is going to tell us which way we're trading once we have that divergence. Down here, this is the relative strength index, or the RSI. It's somewhat mathematical, but basically it's telling us the strength, the size movements of this blue line here, which is what we're trading. So for example, if there were 20 movements upward and 20 movements downward, but the upper movements were bigger or stronger on average, then this white line here would appear in the upper half, which it was. See that? So my entry was about right here. And so you see I had the midline here. So the movements were stronger and bigger in the upper half here. That's where they were appearing. And vice versa. The movements were stronger. If there's 20 movements, both downward and upper, and the stronger movements, bigger movements were downward, the white line would appear down here. And this is our entry. So this tells us when to enter the trade. So for example, my last trade I entered, that blue line was up, orange line was flat. I was looking for a meaningful drop down, which I got right here. This was my entry point. So ultimately, whichever way that blue line is facing, up or down, we want a meaningful movement in the opposite direction by that white line, and that's our entry. Essentially, we're looking for a discount before we enter the trade. So we have up here, that blue line's facing up, and that's the direction we're trading. have a little move drop down, that's where we entered. If the blue line is facing down, we want a meaningful pop up to enter down. So that's the win. So we have this tells us the where, and this tells us when to enter the trade. If you do have questions, feel free to put them in the comment section. I will do my best to get to them when I can, if available. Thank you all for being here. So we do have a good divergence now. I do like what I see. If we have a meaningful pop up, I will enter a trade down. So what we're looking for is a meaningful pop up of this line right here. And I will enter into a sell or a short, which would be this red button right here. My take profit is at $100. My stop loss is at $100 as well. I'm risking 100 to make 100. So those brackets that were there, that was a $100 difference both ways. So we have a good divergence here. I'm looking for a meaningful movement up of this here, of this line, and I will enter into a trade. May not get it though, and that's okay. We'll look for another setup. Patience, right? I still like what I see. I look for a meaningful move, a pretty good significant move upwards of that blue line, which you would see down here. And that would be my entry. Doesn't look like I'm going to get it. Maybe. Got it. So I entered there. That's my entry here. I did a sell. Down here's my take profit order. This is my stop loss order because I did a sell, a downward move. This is my break even or entry point. So anytime this number hits zero, right now I'm 15 in the minus, but anytime this number hits zero, that means it's back at where I entered the trade. That's my break even point. I said that a few times last night. I didn't actually say that's where I entered, but that's what essentially break even means. It's my entry point of the trade. I'm actually going to move this up just a little bit, my take profit, because that was the low. I want to make sure it gets through that area there. So we're at $5 profit now. Let's see here. We'll move this down so you can see. 15. Minus 20. So that's what you also can see that down here as well. That number up here is also going to reflect down there as well. $40, $45. You're just starting to change on us as it gets closer down here to break even. I am going to squeeze this down a little bit because the trajectory started changing. That orange line started kind of coming down. So I am squeezing this down a little bit. I'm going to risk less. Got a good movement down there. We'll see if they go down together there. So we're back to break even. You see those zeros? Now it's at 5, 10, jumped up. Jumped down there. I thought it had a little bit more movement down based off of that, but let's see. May get stopped out here in this trade and hit my stop loss. That's okay. Yep. All right, so we lost that one. And all right, wait a few more minutes, look for another setup. I don't like to enter right away after a trade, win or lose. So we are essentially 1 for 1. I did move that on the previous trade. I did move my stop loss up to protect there. When it shot down here, I thought it came up and was kind of hovering here. It hitting these, I guess, resistance points and was going to go down here. And that's why I stayed in that trade. You got to be comfortable with what you risked, though. So, all right, let's look for another setup. Try to get to some questions here. I am trading on the futures market. Yes, 1 to 1. Okay. If the other side. Yes, this is live. That was a short trade. I entered here, and sometimes that happens with the opposite direction. Try to trade in probabilities. Just meant to show profit loss. From Puerto Rico. Hi, Puerto Rico. Okay. So we will look for another setup. Right now we have parallel lines. So what we're looking for is we're looking for a divergence, a separation between these two lines. The blue line will tell us what direction to trade, and the orange line is a comparison index. The RSI is the relative strength index. This is when we enter a trade. both lines are heading up. The other thing I didn't show you too is I want to show is I look at I'll back out to the 5-second chart, so it's kind of a zoom, right? Zoom out while I look at that movement. And wow, look at that drop. Big drop. That's the drop I wanted on my last trade. But I like to zoom out too, just to kind of see the trend, the direction, the overall direction. And so you can zoom out to the 5-second, you go to the 10-second, but I typically just zoom out to the 5-second just to kind of see the overall trend here. Did have that big drop down. Here's my entry last time, and this is where hmm. Do have a good divergence. I'm just not that big movement is my only hesitation, was that big drop down, right? So orange line's flat, blue line is kind of down here. Pretty good divergence. With that drop, though, I am looking for a meaningful pop up to more than that um, to enter. And before I had that, but again, that kind of I guess reversed on me. But so that's why I'm looking for a bigger movement up before I enter this time. Much bigger movement up. I also want to see this orange line kind of stay flat or head up. So orange line's still flat. Like I said, I like a bigger movement. So we kind of have parallel lines here. And I tell you, after looking at the last trade, what I'm so if you look here, so we had a good divergence originally, right? Blue line was going down, but then this orange line started to collapse. So we started losing the divergence, and then I entered, right? And I think I made a mistake doing that. So if that divergence breaks down, which it is now, that orange line is dropping, I typically don't enter trades. So I think I made a mistake in that last trade, which is kind of par for the course. Sometimes that happens. And so doesn't mean it wouldn't work out, but I tried to, doesn't mean, like I said, it may have worked out, but you can see that the divergence breaking down. So I think I made a mistake with that last one because you can see my entry points here, but that orange line started coming down rather than maintaining flat or where the divergence. So I'll look for another setup. See if there's questions here. What about how do you set the settings of orange and blue and also the dynamic lines? So these dynamic lines are for, they are the trend lines for proprietary for 20-minute traders, specifically trading the gold pattern. And these here, orange line, blue line, here's my symbol right here. Here's where you add the symbols up here. Double click that. This is on TradingView, and you can add these lines necessary. And then, of course, this is the RSI, the Relative Strength Index. I hope that's what you're asking, Eula K. I hope I said your name right. Apologize if I didn't. Start. Okay. So right now we don't have a divergence at 727 or 1927. So those of you that watch me, I don't trade between the 27-minute and 33rd minute. Just based on journaling and things, I haven't been that successful at that time frame. So I don't trade at that time. And then I just, at like the 33rd minute, I start looking for another setup. I've just noticed going back through my journal that a lot of times seeing those during that time, I wasn't very successful. Don't know what it was. So I just decided to make it part of my rule that I don't trade at those time frames. Thank you all for being here. My name is Gino. I'm a student with 20-minute trader. There's 3 of us currently that are trading live. I'm trading Monday through Thursday at 7 p.m. Kai is Monday through Friday at 9 a.m. And then Lance is Monday through Friday at 3:30 p.m. Tomorrow night, I will not be here. Kai will be stepping in for me. My pup has to have surgery, so I will be with my dog, which, stinks, right? Nobody part of the family. But so Kai will be stepping in for me tomorrow night, and I'll be back Monday evening. So we come out here all the time and we enjoy it. Russell asked us to come out here and trade because, it's about what the students can do. It's about how we communicate what we're doing and trading. It's not so much about what he can do or other high level traders can do, right? And so we enjoy it. We love doing this. I specifically love coming out here and talking with all of you, trying to do my best to answer the questions, trading in front of you. I am trading a funded account, so I didn't touch base on that today for all of you. So essentially, I've got this funded account through Prop Firm, and basically, a prop firm is a firm that makes money off fees of people trying to succeed in passing trading challenges, like challenge accounts. They give you a bunch of money to trade with if you simply prove to them that you're a good enough trader. When you pass the challenge, you're given a money that you can or accounts that you can trade with a certain threshold for a loss. And if you do lose their money, you have to pay them back. So you just basically, like, say, if you buy a challenge account, some accounts are $50, $100. You can kind of think of it as a rich uncle. If you do well trading for a fee, you can get a funded account, hit your threshold, take a payout, and they just take certain fees. So what I did though is I bypassed the challenge account and went right to a funded account. And so to trade in front of all of you, I went through Top One Futures, just decided to go that route. And basically this account started at 50,000. My drawdown, and when I talk about being able to, you could lose the account, essentially maximum loss limit is $2,000. So if this account got down to 48,000, I would lose the account and I would have to get another account, start all over, and pay for that. But the goal is to get this account to 53,000. That way I can take a payout, and all of you can come with me on the ride to do so. The prop firm is sort of confusing concept, but if you go to 20-minute trader YouTube channel, type in prop firms, Jeremy Russell does a nice explanation of it, which will kind of give you a little bit more detailed guidance on that. But I am trading a real life funded account. Thank you, Patty. I appreciate it. Thank you. Yeah, it's on my mind a little bit, of course. So try to, you know, I talked about it last night. I probably talk about it quite a bit. Trading, there's a lot of mindset to trading, and part of that is, we normal person, a full-time job, family, dealing with life's hurdles like we all are. So coming out to trade, you really kind of got to get your mind right and be in a good mindset, mind frame. And if you don't feel you're that way, don't come out and trade. And I feel like I'm good. It's on my mind, but it doesn't, And so I appreciate that, Patty. And tomorrow we'll spend time with him and taking care of that. It's like we take care of everything else we have to handle. So, I am on the futures market. And the benefit about the futures market is, well, there's a couple, right? And number one, we can trade in both directions. So I talked about at the beginning, we're looking for a divergence, blue line, whichever way the blue line is facing, that's direction we're trading, whether it's up would be a buy or down would be a sell. And you can do that on the futures market compared to the stock market. The stock market, another difference is the stock market's only open from 9:30 a.m. to 4 p.m. Monday through Friday. And the futures market, which I'm trading on now, opens at Sunday night at 6 and closes Friday at 4. And it's only closed from about 5 to 6 Monday through Friday for maintenance, etc. So essentially, it's open 23 hours, which is great for 20-minute traders and us that normal jobs and things like that. Life's hurdles. We're dealing with so many different things that we can trade a variety of time frames, right? Whether it's 1 in the morning to 1:20, maybe on our lunch, or at this time at night, or even at midnight, you can trade. And so that's what's such a huge benefit about the futures market. It is so flexible in us being able to trade based on our scheduling, et cetera. Also, too, the futures market essentially amplifies your money. So hundreds of dollars behave like thousands of dollars as compared to stock market trading. But for us, having the ability to trade it multiple times. Now, I will say, you know, it's something that you have to consider. So, look, if you're on YouTube, click the link in the description. If you're on Facebook, Instagram, type the word learn in the comment section. We'll send you a free ticket to the web class where you get all your questions answered live. You will have to click the link and register for the web class. But let's say you decide to become a student with 20-minute trader, join the 20-minute trader club, and you decide to start trading, right? And you start to jump in, and definitely look me up if you do, though. We'll definitely talk about my experiences and trade together. But the one thing I definitely recommend when you start trading is kind of get used to a couple of time frames, right? Don't be so sporadic with trading different times, only because, like for me, I want to trade a few time frames just because I want to get used to the volume, used to the volatility. If you're trading a bunch of different time frames, for me, it was hard to identify kind of the movements and how much volume and et cetera. So get used to a time frame if it's possible. And that's what's nice about the futures market is there's so much flexibility because there's so many times you can trade. And yeah, definitely get used to that and get comfortable with it because there's more volume at certain times, more volatility, et cetera. I am trading, yes, on the 1 second time frame currently. They answer that. So Grandpa Trades, I love that. So this funded account here I got it from Top One Futures. It was 40% off. It was like $239, I think. And so they also have challenge accounts you can buy and go through, but I went right to funded account. I wanted to do that. I also trade funded account, my own other funded accounts in the morning as well. That I actually went through challenge accounts to get those funded accounts. But here I wanted to just jump right into a funded account with all of you. And that's through Top One Futures. That's who I went through. There's multiple platforms though. Would using your iPhone to trade work, or is it recommended to get a laptop? Well, I've never traded on my phone. I don't think I could or would. And so, well, the cool thing about 20-minute trader, aside from how the understanding the ease of what we're looking for as far as the indicators and stuff. Now, we do have, looks like a setup here. I'll get back to that question in a second. So we're starting to get a divergence here. An orange Orange line followed. Let's see if that continues. Orange line's following up. We'll wait a few minutes. So I've never traded on the phone, and I don't think I would. I wouldn't. I just want to be able to see things. So we don't have like a huge setup. All I have is when I first started trading, I just traded on the laptop. I first started actually actively trading like in July. Been a student for about a little over a year, but I do have an external screen that I use for as well. So I have essentially two screens, but I've never traded on the phone. So I don't know. I don't know. I don't think I could do that. But if you can do that, yeah, I mean, I'm sure you're able. I wouldn't know how to set that up. You know, I need to buy a new computer. What is the most important thing to consider when using 20-minute trader? Well, just a computer in general, probably nothing specific. Probably to 20-minute trader. Just have the the RAM if you're going to have another external screen. That way your computer can take it. I think that's kind of probably the biggest thing, but nothing specific to 20-minute trader. Like I said, I have it's a newer laptop. I think it's 16 gigabytes. I don't know much about computers or technology, but I think it's enough, right? I have an external screen, like I said, and then I have the laptop here. And that's all you really need. You don't even need an external screen at the beginning. Like I said, I just use the laptop to start. Eula K, I don't know that answer. Sorry, I don't know that answer. Do have I may have missed an entry there as I was answering questions. That's okay. See how it kind of dropped down. We have a divergence here. This line somewhat flat. Blue line pointing up. We'll see. We'll see if a more meaningful drop. That orange line is starting to come up. So they're starting to go parallel. So I won't enter here. So how would you know when to insert a trade and why? So, okay. So we're looking for a divergence, right? And we're looking for whichever way the instrument we're trading is the blue line, which is the value of gold. Whichever way that blue line is facing, that's the direction that we're going to trade. So if it's facing up, we would do a buy. If it was facing down, we would do a sell. This tells us where once we have the divergence. This isn't a very good divergence. You have that kind of that orange line coming up, so it's kind of getting parallel. And so now, so that's the where. This tells us the where. Down here, the relative strength index or the RSI, which tells us the strength or the of the blue line. Essentially, it tells us the strength of the blue line. This is our win to enter. So if we have an upper facing blue line, which we would trade up, which would be a buy, we would look for a meaningful drop down in order to enter. Think of it as like a discount before we entered to go up, right? If it was pointing down, right, when we want to do a sell, we would look for a meaningful pop up to do a sell. So we want a movement in the opposite direction of the way that we are trading. A lot of times, and that movement is somewhat subjective because based on the strength of the divergence, what you're seeing, et cetera. But that's what we want. So we had that. So there wasn't the divergence broke down. We had that movement down here. So that's what I mean. So if we were trading up, which we would have been because that's the way the blue line was facing, we would want a meaningful pop down to enter. And this, because this tells us when. So we would look here, we would watch for the meaningful pop, and then we would enter our trade. That's it. Just the relationship of these three lines. That's all we're watching. That's all we're watching. Hope that answers. Hope that helps you out. Hope that helps. That's what I'm looking for. We're looking for a divergence. Nothing can happen before we have a divergence. Nothing. Right? Once we have that divergence, we recognize obviously which way the blue line is facing. That's the way that it's trading, or we're trading. And then once we bring our eyes down here to the RSI, we look and we make sure we maintain that divergence. We still have that divergence. And then we watch the RSI. We look for the meaningful movement in the opposite direction we're trading, one that we like, and we enter. That's it. That is it. That's all we're looking at. All we are looking at. So let's see. So we don't have anything now. So Greg says wash sale. I don't know what you mean by that. Wash sale. You're welcome, Grandpa Trades. You are welcome. Yes, Greg, I can see your chats. I don't know what wash sale prevents a trade for 30 days. I don't know what that means. Sorry about that. We do have a little bit of a divergence, but nothing that's today's a little bit different than yesterday. Yesterday had some really good, crazy divergence. I actually missed one entry last night, and I think a lot of that divergence and stuff was created by, I think there was a potential agreement or potential coming agreement for Iran and the United States to come to an agreement. So that set at like 7 o'clock, that set the market shooting up, and I think that helped maintain some divergence and volatility. I think that's why we had a lot of that. But tonight, not so much. We are starting to get some now. We have that orange line going up, blue line starting to go flat. So if we get a little bit of a meaningful pop up. So yeah, so the blue line is facing this way. So we get a meaningful pop up, I will enter a sell. I'm just watching this right here. All right, I just entered. Oh, that was a delayed entry. I just entered there. As you can see here, hit the button. It was kind of delayed when I entered there. So right here's my entry. I had the meaningful movement up. I entered, and now we'll see. See what happens. So this here, again, my take profit is down here. Oh, it's going the opposite direction. Wow, quickly too. Quickly. Oof. Look at that movement. Something happened. Look at that jump. Wow. Wonder if there's another tweet. Look at that. So I entered here, and sometimes that has an impact, right? If there's a tweet or something happened, there's a news announcement. Let's see if there was. See anything. Part of it. Last night I was 2 for 2. Tonight I'm 1 and 2. I have one trade available left to make, and if I go to the 5-second chart here, look at that. That's a humongous movement for gold within a matter of a few seconds. Because if you go farther out, look at that. Go farther out here. Look at that. Just from here to there. So something impacted it. That's part of it. Trump talking in probably something, probably. Yep. Probably. Probably some sort of, but that's okay. We'll look for another setup. That happens. Look, you're going to lose. Last night I had a very good night. Tonight, not so much. But you can't. That's stuff that sometimes, you can look at things like Forex Factory and different where there's scheduled like announcements, like news announcements, different reports coming out, whether it's USA or another country. But you can't obviously, whether the president speaks or somebody else speaks, certain quick announcements, you don't know. So that just happens. I did lose that trade, quickly, based on something that was definitely not normal. That movement right there. Yes, David, I only trade futures. Yep. So I am down now, just over 200. Had climbed back, so I'm down about 200 today. I was up 200 yesterday. Par for the course. But we don't look at one individual trade. We look at 50, 100 trades, right? Where do you sit as far as profitability, as far as winning, etc. And so that's kind of how we look at it. But this here, I'm not gonna. That's just out of my. That one was just out of my. All the trades are out of your control, but that one specifically just based on that volatile movement. There was something that happened, or it was announced, or somebody said something. So we'll see if there's anything that comes out. That may be it. It says. Trump says Iran issue will be resolved very quickly. That was 3 or 4 minutes. That was 4 minutes. 4 minutes ago. That may have been it. That may have been it. That probably was it. All right. How do you know if you have lost a trade? Yeah. So when you have those brackets up, all right. So right now, like if there's a divergence and the blue line, I'm predicting it would go down. So I would click sell. So my take profit would be on the bottom and my stop loss would be on top. Basically, if it goes in the opposite direction at some point and hits your stop loss, you'll know down here because it'll tell you, right? Like I started the day at, I think it was 49,975, and now I'm at 49 or 47,74, right? And you'll know down here. You'll definitely know once you get used to trading and everything. Once you kind of anticipate that, right away, definitely. But by the brackets too. So you set up what are called bracket orders. You have a take profit, and you have a stop loss. Your take profit's always at the bottom or top of the direction you're trading. And that last one we were doing a sell, so it was at the bottom. My take profit, my stop loss was up here, and it came up, and that's where it hit. Do you trade live every day on here on Instagram? Yeah, Monday through Thursday at 7 p.m. I'm live. Tomorrow I won't be out here. Kai will be stepping in for me. I said earlier my pup has to have surgery, so I'll be with him. So Kai will be out here. Kai trades from Monday through Friday at 9 a.m. and Lance trades Monday through Friday at 3:30 Eastern, all Eastern times. You are welcome for answering your question. Is the bottom chart RSI? It is. Yeah, Jay Cooter, but anyone else notice on these live streams there seems to be more losing trades than winning trades? If you come out all the time, you'll see both, and that's okay. It's live. We're still learning too. That's why we're students. We're coming out here. I hit that yesterday. I hit 2 trades. Tonight I lost 2 trades, and that's par for the course. You're gonna lose. You are gonna lose. And anybody that thinks that they're not, it's just they're not being realistic, right? It's how you handle the loss, how you mitigate your risk, and how you kind of just stay nonchalant and know that we're not looking at one individual trade. We're looking at 40 trades, 50 trades, 100 trades. And I'm still learning. We're all students and we're still learning. And so, but it's a great to point that out. And Ken had a nice answer. It's a good thing showing losing trades because it's real, right? Just like it's real life, dealing with life's hurdles when you trade. And that's why I'm trading a real account as well, just to kind of show that the process and what we go through. And so, like, hey, last night was a great night. Matter of fact, it was so good. I actually missed one additional trade for sure. I missed that would have been full take profit. I would have hit that would have been another 100. But there was another one too that I probably missed as well. So this is part of it. And that last trade, look, that last trade, the president said something, and it kind of broke the probability, right? Because we trade in probabilities. Nobody ever knows which way this is going to go. And so, that just it's par for the course. Question: how do you determine to put your stop loss and take profit? So based on essentially the distances of the movements. So, even before, if we go back here, you can see these movements are, if you look at to the pointing at the screen, like you can see. If you see here where these kind of points are, essentially. So if you look 4704 down to 4702, so essentially 2 points. So that's how you kind of look for your distances, right? Know where to put your stop loss and take profit. So you set that up beforehand. So when you enter a trade, when they populate onto the screen, they're at the distances you need with a good distance to be able to hit your take profit. And of course, those brackets, you can move them. So maybe when you enter the trade, they're maybe too far away from the distance you'd like. You can move them into a better range or a better distance. So there's a misconception that you can only trade between 9 a.m. and 11 a.m. I'm not sure what you're asking, Full Moon. I'm not sure. We're on the futures market, so you can trade from Sunday night at 6 p.m. Basically 23 hours. The only time it closes on Friday at 4, but this futures market is open from Sunday night at 6 till Friday at 4. Or actually 5. And so there's 23 hours there where you can trade. I think it's closed from 5 to 6 Monday through Thursday for maintenance, et cetera. And then it closes on Friday. Don't have anything here. You can see after that big jump, it's kind of remained choppy. There's a little bit divergence, but look at these kind of chops here. It's kind of center line-ish. I don't like anything I see. So hit one trade today for a small profit and lost 2. Yesterday was 2 for 2. So I don't remember what I was on Monday. Monday, I think I was 1 for 1. So yeah. Look, and that's part of it. Coming out here, I enjoy coming out here to do this and then talking to everybody. Hopefully, you got something out of this. If this speaks to you, if it piques your interest, if you're on YouTube, click the link in the description. If you're on Facebook, Instagram, type "learn" in the comment section, and we will send you a free ticket to the web class. You'll click it, and then you'll register. You can get all your questions answered live, more so than I was able to answer here. And check it out. But like I say, we just look at the relationship of these 3 lines here. And you got to see kind of what happens when there's a volatile movement, when something's out of the ordinary. So thank you all for being here. I will be back Monday night at 7, and Monday, all next week. I do have a guest coming on the 13th. She's another student, which is next Wednesday. She'll be coming on to join us. So thank you all for being here. Appreciate it. Hope everybody has a great weekend. Kai will be here tomorrow night for me at 7 p.m. Come back and join her, watch her trade. Thank you, everybody. Have a great night. Have a great weekend. We'll see you Monday. Thank you. See you. Bye.